So the first thing that I want to talk about is a higher time frame context. And if you are a day trader, if you're a scalper, it's very important to understand what the context of the market is. Ever since September started, the first week of September, the market has been finding very bearish action where we've been seeing very nice and smooth downside sell-offs. On an intraday basis, every single time the market tries to move up, it fails, and what I call that is rallies trying to fail, and I view that as no strong buyers in the market because every single time the market has tried to move up, the past 2-3 weeks have been very, very short-lived. Validating what I just said, the previous day on the 27th of September, Wednesday, we can see the intraday rallies failing. The market tries to move up, it fails, tries to move up, it fails, moves up, fails, etc. Then the market comes into our key level at 42.84 and we get a very strange random little rally with strong volume, strong volatility, and strong momentum to the upside, rejecting off of our 4329 supply zone going into the close. Now, this strong action of buyers is something that we have not seen recently the past 2 or 3 weeks. A different reaction in the market will always or most of the time bring a different result, and that's my motto. The different reaction is we're seeing strong buyers and we have not seen this type of action. Also, I want to talk about a key level at 43.48, 43.54. It's been on my charts. If you've been following me on my Instagram, I've been posting about this level in the recaps pretty much every single day. Every single time we come into this level, it acts as support if we are above it, and also acts as resistance once we are below it. So it's a very, very important key level that I have to keep on my charts. Now, I want to go over the pre-market plan for some context so you can understand this setup and the levels that I was watching. I post these every single day in the Discord of the levels that I'm looking out for, potential trading scenarios, and how I'm looking to trade the market. So scenario number 1 was our key level was at 43.29 and 43.37, which is that supply zone that the market did reject the day prior. Scenario number 1 was if we can get strong acceptance above that supply zone, because this was a weaker zone, and I classify zones as strong, as key, as weak, as ones that I'm not going to pay much attention to. And this was not a supply zone that was very, very key due to the key level that we had directly above it. So if the market can rally past this supply zone, find strong acceptance, strong buying pressure, then I want to play the market long, targeting those blue lines over here, which is that key level at 43.48, 43.54. And those are the levels that we were watching. Now, what's very important here is the market's going to open up and we get a strong little 5-minute rally into VWAP where we reject around 4314, 4315. Now, what we were watching for here was this was a key level from the day prior, and also on the tape intraday, we were seeing large buying there that we were watching for the market to break above that level now, above VWAP and above 4315 to play the market long, targeting that key level at supply in the pre-market plan. So now new information is getting developed and we are tweaking our plan based off of this information. What I'm talking about new information is here looking at this footprint chart. This is done on Sierra charts. You can see the market rallies into these 43.14s, 43.15s, and if you were to look at the high of day, we see a positive delta of 1,062 lots, and then directly below that of positive delta of 410 lots. So there was high volume at the highs, rejecting VWAP and failing to move the market higher. Looking at the heat map here, you could obviously see this a lot better off this visual. The market rallies into these 43.15s, rallies into these 43.14s. There is strong buying, offer step in, and there was high volume at the high. Now for me, high volume at a high or high volume at a low is not a good indication that the market will reverse there. It's a good indication the market will test that level again at some point in the future. Hence why we are watching for the market to break above the 4315s to play it long, targeting the supply zone in our pre-market plan. With this in mind, the NASDAQ opens up as well. We sell off into our demand zone at 14657 and immediately fail to move lower, and aggressive buying then stepped in thereafter. So this was when the S&P 500 also was pulling back, and the S&P 500 was at the lower portion of its balanced range. So going to a higher time frame chart, such as a 5-minute, what we're going to see here is this consolidation overnight left us with a balanced range. The idea is when the market's balanced, you want to be buying the lows and selling the highs. So the market essentially broke its pre-market low and was finding support around this level, this level, going into the open. All these levels that were tested right here were holding. So now it's my job to use the tape to gain clues about the auction. What I mean by this is here we have the low. The market breaks the low with aggressive selling around the 943, 944 bar. You can see all that aggressive selling here down the low. Then this bar opens up down here. Very, very little activity below the low. And this 5-point range right here closes near the high with strong buying pressure stepping into the market. What this looks like on the heat map is here is our rejection at the 4315s earlier. Here's the market selling off below the low. Here is all the aggressive selling. I know a lot of people are visual learners, and I think using this heat map is an easier visual for you all to understand this. Here we can see all the strong selling, strong volume below that low, below the lower balanced range with no downside follow through around these 4302s, 4303s, and then the strong buying then came in. Now in real time, this is not no hindsight trading. This is in real time. I spotted this action at the lows. Exactly what I just said. And I said I'm seeing some buying here. I am putting risk on to take it long at 4305. And what I was simply doing was I was using the contextual analysis about everything that I have been saying so far in this video, that we're spotting buyers. Let me use that 15 level as speculation that that level will break. So I like getting in before a move or getting in before a level triggers, acting like that level will be a magnet where the market can possibly gravitate. So what I was thinking was here that we're finding buyers at these lows. I'm seeing the buyers, and it's most likely the market will break those highs at the 4315s. So I will use that as a target, and then I will use the zone above that we were watching in the pre-market plan as a second target. So I got long at 945 when the market looked like this, stop loss below the low, targeting a high a day breakout into the supply zone above. Now I will not lie here. 3 minutes after the market came down and I was down about 1.5 points on my position, and I really was ready to sell this position, and I was getting ready to stop out before my stop loss. I just was not comfortable with it, but I held on it for another minute, and the worst case that would have happened was I would have got out for a loss that I planned for where my original stop loss was. But I held on to it. The market put in a higher low here, and then the buying began to step in, and then we got a strong push above the high. You can see it on the tape here. Here's the sell-off. Here is the higher low. And then here is all the aggressive buying. Look at all the delta starting to build up above into, and we break our 4315 target very, very strong. And I am now looking for weakness to get out of my trade. Now, I was seeing very, very, very strong and very, very bullish action. And this could have been my only mistake today because I probably left about $20,000 to $25,000 worth of profits on the table by getting out of my position. If I held this thing and followed my original pre-market plan, this would have been a $20,000, $25,000 more profits in my pocket, and it would have been a really, really good trade. But I'm not looking back at it like that. I'm looking back at it. The market rallied into the 4318s, 3 points above my original target. And I got out 75% of there just because of the real market conditions of upside moves have been failing. So I did not want to expose myself and holding runners in a market which was very, very bearish. So I said I don't like holding runners, but I am continuously holding 25% of this. I've scaled out already. This trade can only turn green on me. It's looking perked up, meaning this thing is looking like this flower's about to bloom. The shorts are about to get squeezed, and the bullish momentum is going to keep coming. The only way for this to continue higher is if there is acceptance above the upper balanced range. Then we come up, we continue to rally, then we're struggling even some more, and I get out this full position at 4323. It was about an 18-point profit on this. And I said, if I had to think, which thinking is no good, she can still keep going up. This is why the reason why I got out of this trade here. The main reason I got out my full position at the 23s was simply the market rallied into this around 10 o'clock. And if we were to look at the highs right here, a lot of aggressive buying. The market dips down slightly, and then about 8 minutes after we come back into the high, see a lot of aggressive buying at the 4323s, 4324s, about 5 points under supply. But there's tons of buying and they're not getting rewarded despite showing a ton of effort. And if the market pulls back, these buyers will be trapped. Also, we've seen, and if you've been watching the tape, around this level the past 2-3 sessions, the market has been finding the same activity here and it's been pulling back. So I was comfortable getting out and not holding runners with this new information. That is very, very key here. Now that was a good move because the market did eventually pull back, and maybe, looking back and reviewing this, I would not have held runners. If I held here, I don't think I would have held on this pullback, and I probably would have gotten out and protected myself because we came right back to where I entered. However, let's look back at my commentary, because I said if we can get above these guys at the 23s, 24s, it could get explosive and we can see a really large short covering rally by end of day, right? Here's all that aggressive buying. You can see it on the depth of market. Tons of buying at a high with no follow through is a sign those buyers are getting exhausted and the market can possibly reverse down. Very, very key point right there. Then we get the pull back. And then eventually the market breaks above these guys. Strong buying on the tape. I mean, looking back at this, look at all that strong buying on the break above those 25s, those 23s. Look at all those large bubbles coming in, a very fast moving tape. And we got that really, really strong rally above our supply zone into our key level. And again, looking back at it, I entered literally at the low of day today. And I sold over here. I missed out on another probably 30, 35 points worth of gains. Now, the only issue was that was a mistake. And my second mistake was I walked away after this profit. I was comfortable with it. And I was not able to even be at my office to catch this rally above the pre-market plan. Because remember, this is just showing you the significance of playing levels. Short covering rally above 4329, right? This is the significance of playing levels, our original plan, and levels are levels. Go with the flows of the market. If we can get above our supply zone, that 4348, 43454 key level had a high out of triggering, and it did. And there's a lot of people that capitalized on this move today. Very, very clean price action to the upside despite the past few days of it selling off. Once you learn how to use price and volume, it's a skill that will compound you gains, and you will look at the market very, very differently. So I'm going to end it on that note. This is an impromptu little recap. I hope you all enjoyed it. If you did, subscribe to my channel, like this video, and definitely check out the links in the description below. Follow me on my Instagram and check out the Invested Trade website. But peace.